Hello and welcome to CHAMAN Property Lawyer, the #1 platform where you simplify property and real estate law in Nigeria. I am Charles Chukwumakwoka Esquire, the managing partner of CHAMAN Law Firm and also the Nigerian leading property and real estate lawyer. If you are new to this channel, kindly subscribe, like and turn on the notification bell so you don't miss out weekly legal education videos designed to help you to avoid mistakes and understand your rights and make smart legal decisions. Today, we will be discussing on one of the most important and misunderstood topics in property transactions. And what is this topic all about? Understanding mortgages and property loans in Nigeria. Understanding mortgages and property loans in Nigeria. So if you have ever wondered what exactly is a mortgage, how can I get loan properly from bank legally? What happens if I default on repayment? Do you know that? And what are my rights as a borrower or also as a lender, because it might be coming from a different angle? Then say, with me till the end. You need to watch this video to the end, because by the time we are done, you will fully understand how mortgages work and how to protect yourself from costly mistakes. What is a mortgage? What do you understand by the word mortgage? A mortgage is a legal agreement between a borrower and a lender, usually a bank or financial institution, where lender provides money to the borrower to buy or develop a property. And the property itself serves as security for the loan. You get it? Simply put, the property you are buying or developing becomes collateral for the money you are borrowing. You get it? So with this, bank will have nothing, less or nothing to lose. Whatever you are buying is the collateral. The borrower agrees to repay the loan, usually with interest over a period of time. It could be for 5 years, 10 years, or even 20 years, depending on the agreement. They have different prices, different years, different terms. Those are terms. Understanding Nigerian law is very important when it comes to mortgage, because Nigerian law are not like Western laws. So under Nigerian law, mortgage gives the lender the legal interest in the property until the loan is fully paid. Once payment is completed, ownership reverts back to the borrower. That's what is called reversionary interest. Legal framework for mortgages in Nigeria. What are those legal framework? Mortgages in Nigeria are governed by several laws, including #1, the Land Use Act of the 1978, which vests all land in governor of each of the states, and it makes governor to give the consent before it can be able to transfer the right of that property to another person. You need to know that. So Land Use Act 1978 is one of the primary law. Another law that governs mortgage is Conveyancing Act 1881. Conveyancing Act of 1881. And also the Property and Conveyancing Law of 1959. It also provides rules that create mortgage and also enforce mortgage in Nigeria. Because you need to know, Conveyancing Act, they call it CA. PCL, that's Property and Conveyancing Law. You need to know, Conveyancing Act of 1881 was meant for eastern part of Nigeria. So most eastern part of Nigeria and some part of north, like Kwara State, they are under CA state. Northern part of state and the Kwara is state west, but fall between west and north. PCL state it governs the state in the western Nigeria. Please take note of that. And all this regulates the mortgage in Nigeria. The next is Mortgage Institution Act of 1989. It regulates mortgage finances. All the company or institutions that finances mortgages is law that regulates them. Bank and Other Financial Institution Act, BOFIA Act. BOFIA is one of the law that governs mortgage, especially the mortgage institutions, and also all financial institutions that gives money for mortgage. Anybody in the taking mortgage, BOFIA Act is not only for mortgage institution, all banks. Before any property can be mortgaged in Nigeria, take note, governor consent must be obtained. before transfer an interest in land without the consent, it makes the property invalid. So take note, by virtue of section 22 of this land use act that I mentioned, if you acquire any property or any rights, mortgage rights, without the consent of the owner of the state, person that they entrusted the state into, that's the governor of the state, that transaction is invalid. Any alienation of interest, whether it's a sale, whether it's mortgage, whether anything, consent must be there. Types of mortgages in Nigeria. What are the types of mortgages in Nigeria? There are two major types of mortgages in Nigeria. Number one is legal mortgage. This is when the borrower formally transfers a legal interest in the property to the lender. Until repayment is made, it must be done through a deed of legal mortgage, which must be stamped, registered, and perfected at the land registry of that state. This is what is called legal mortgage, and that's what most banks are doing. So you need to understand all this. The next is equitable mortgage. This occurs when there is no formal transfer, but the borrower deposits the title documents with the lender and sign a memorandum of intention to create a mortgage. There must be that intention. Why easier to create? It does not give the lender full rights, full legal rights to the property until it is converted into a legal mortgage by court order. It's only court order can convert it to. So you need to know all these things. Other variations include fixed mortgage, that's the repayment over a fixed term. Floating mortgage, you also have floating mortgage. Interest rates may float until it crystallizes. Simple and compounded mortgage, that's what they call simple and compound mortgages. It depends on the interest as it's being calculated. How mortgages and property loan work. Do you know how it works? No. Here is how typically mortgage works in Nigeria. I want to walk you through. The borrower identifies a property to purchase or develop. That's the first thing. They approach a mortgage bank or a financial institution for financing. The lender, that is the bank, evaluates the property, the borrower's income in case of to repay, and also repaying capacity. They look at all these things. Both parties agree on the loan amount, interest rate, tenors, and as well as repayment schedule. A deed of a legal mortgage is prepared by a lawyer and not any other person. You see why I say you must get a lawyer before you embark on any mortgage. And executed by both parties, both the lender and the borrower. And it must also be registered. The borrower takes possession of the property, but the lender keeps the title document until payment is fully repaid. If the borrower defaults, the lender has the right to foreclose the property, meaning the property can be sold to recover the loan. However, foreclosure must follow due process. A lender cannot seize your property unlawfully. They must issue notices. If unresolved, approach the court. It's only court that foreclose a property. You see those transactions that you see somebody, because somebody borrowed money and default at the end of the day, he decided to sell off the property, you can challenge it in court. They must follow the due process before they